me, I was thinking that 250K Bitcoin would be possible, but this seems to be indicating that it could be around.
Hey everyone, welcome back to the show. Hanging out with Crypto Rookies, aka Patrick, who's going to give us an update on his Gridbot strategy. And also, he's got a book out, so he'll mention a little bit about that. How you doing, Crypto Rookies?
Yeah, the market is a bit choppy, but it's kind of good for my Gridbot, so I cannot complain on that part.
So just to kind of recap, you have a Gridbot strategy around Bitcoin and Ethereum.
Okay, just a clarification. I had the Gridbot on Ethereum, but I took all of the capital of that and I moved it into Binance and I put everything into just the Bitcoin bot at the moment. Because the thing I was a bit concerned that if the price of Bitcoin would go down, I didn't want to, on top of that, suffer the potential decrease of Ethereum. So I just wanted to put everything to simplify the process in Bitcoin. And I'm sharing my screen right now, but it's been active for 9 days already, this one. And that thing, the decrease of this is not super relevant because that's based on USDT in a sense. So right now, annualized, it looks like I would have maybe 96% per year, but this is not entirely accurate. So in reality, is that here, like the match profit is what I care about in this case, because I'm using the coin M, which means that when I make profit on that bot, the profit are kept in BTC itself. So the bot is basically like trading Bitcoin on itself in a sense, as opposed to trading against USDT. So that means that I'm basically just accumulating Bitcoin. And in this case, I accumulated 0.0051 Bitcoin. Currently at like around $60,000. That's about $300 in 9 days. And that was with an investment of $9,000. So it's a little bit above 0.35% per day. And I think per year with the compounding, that is like close to about 300%. So, and that doesn't include the fact that maybe Bitcoin will be increasing significantly over the next year. Because it's in the past 9 days, the price of Bitcoin hasn't really increased or decreased that much. The market price is currently 61,421, and my entry price was actually above that. The profit that I generated is why I have a little bit of annualized yield that is positive. Even though the price of Bitcoin has decreased over that period of time, I'm in the positive because of that part. I'm at about like 200 trade already in, or more than 300 trade in 9 days. So I think it triggered quite like enough to be worth it. And yeah, I think on this case, it's a 5x leverage because I wanted my liquidation price to be low enough that if Bitcoin price goes down to 52K, that I don't get liquidated or that I'm very far from it.
So my question is, what would cause you to change your strategy? How much would we have to go up
Yes,
by, for instance, in order for you to shift your strategy?
I think in this case, I'll keep this bot strategy functioning the way it is. So I'll probably trade Bitcoin, Ethereum, probably Solana, and I will probably also activate some bots that are like not a coin M, but maybe like a Solana Bitcoin pair, maybe a Ethereum Bitcoin pair as well. This way, when there's a dip in comparison to USDT, typically there's fluctuation between the assets and price, but overall that means that I'm not really at the risk of liquidation because because both assets would go down kind of together or in correlation. So that means that I'm much less at risk. And meanwhile, I'm accumulating kind of both token pair that way. So I think I'll try out some. I think so far I haven't found an exchange where I can use leverage with trading like a pair like Solana and Bitcoin. But I'm testing it on OKX at the moment. But there's no leverage, so the return are not like as much as one like 0.34% per day. So, but thing I'll update that as I get more information about it. So in terms of this is just one strategy to make money. There's also my aggressive kind of portfolio strategy that I invest in. It's more like a buy and hold. This one I don't prefer it more than the Gridbot strategy, but most likely what I'll be doing, like starting now, is investing in pre-TGE project. So that means that I'll be probably signing up on some launchpad, or because I'm quite involved in the in the community. I get access sometimes to invest in project before they launch their token. Sometimes I do it with my own time by sweat equity, but sometimes I can just put money as well. So I think that's probably more of an interesting strategy right now to start looking into because let's say in 2021, let's say I invested like $2,000, and then a year and a half later I had like $3 million if I recall. And that strategy was not using Gridbot back then. It was basically buying very, very early stage project as they were launching on the on the on the on the on the market, and then riding them as they grew, and then selling some of that to buy into other things. So that's even more risky than my aggressive portfolio. But I think a lot of people make a lot more return that way because most project when they are that early they do more than 100x return in a period of a year, like the successful one at least. The problem with that is that you have to spread and diversify quite a lot because a lot of the project end up going to zero. So some of them will never even launch, or they do a rug pull or whatever it is. So it's very risky, but it's probably one of the easiest way to make money at the same time if you pick the right winners. So right now there's two narrative that seems to be really like the meta kind of investment pattern is meme coin and AI are really outperforming the rest of the market quite a lot. They are often in a position of strength whenever the market goes down and start recovering. We see the meme coins and the AI project go back up more quickly. So I say arweave, Wildcoin, AGIX, Render, Near, Rune. A lot of them are kind of related to AI, Akash also, and then thing, Pepe, Floki, Doge. I think it's a lot of meme coin as well. So and with so that's interesting to see in a sense that meme coin has zero real technology to care about or fundamental, but they seems to be performing really well, and we're starting to see some hedge fund and VC fund looking to maybe allocate quite a lot into meme coins. So the market is changing rapidly in that regard.
Yeah, I thought I saw something on Van Eck recently. They
Yeah,
did like a, was it like a meme coin index or
exactly.
something?
Exactly. Like in a sense, it's sad, but if you want to make money, just follow the trend. It's like you know, like traders on the stock market often they don't really care that much what they trade. It's more about the return. So it's philosophically speaking, it's better to support projects that have real technology, but at the same time, if you can make several $1 million trading meme coin, maybe after that you can use some of your profit to do some good in some fashion or another. So
But isn't, okay, so yes, I see that AI and meme coins is currently trending, but don't we want to be in the forefront of that trend? Don't we want to front run whatever the next trend is, or are we overthinking it?
uh, I think that depends on the phase of the market. When we're like in the strong bull market and everything goes up, you want to reduce your IQ because the stupidest things sometimes do better than the stuff that require brain like thinking. Because people don't have time to look on what they're doing. So when FOMO like really kicks in, people just throw money at things with barely analyzing anything. So having a project that require people to read the white paper is just not gonna happen. So that's kind of why meme coin do so well in a sense, I guess. It's sad, but I think people who are gonna spend time reading a white paper and going deep into the technology, they are probably not gonna do that while we're in the heat of the bull run. They're gonna do that during the bear market or when the market goes sideways and they have more time to think and research. So I think that's why you have to lower your IQ when things are really pumping, and then go back to using your brain when the market gets frothy, or like it's time to really invest for the good stuff that will last more than one crypto cycle. I think that there's been another dip in the past day, but overall we are still in the range between 74K and 59K. So I think we are still in a ranging market for potentially several more weeks. And I think right now, if you look at the range between 74K and 59, the midpoint is about 66. It's been a month that we're in the bottom part of that range. So it's not impossible that it could go back up and flirt with the upper range of this. But at this point, it would require something very bad into the economy, I think, to push the price go down. And I don't know what would be that event that would really push the price below 59K and go to the 50K region. So I think I'm a bit less tempted to think it's gonna go that far down. But I really think it's gonna keep going sideways here for probably another month at least, and maybe up to September, like we discussed before, in terms of every halving cycle. There was a period of time after the halving that just goes sideways for a while before it starts to pump again to much higher price. Once we pass that 74K region, what is the next big step? That is not always easy to figure out what is a proper kind of zone where the market will probably start to saturate. So you can, on TradingView, you have the Fibonacci retracement, and typically speaking, people use it kind of in a way that you go from the bottom to the top, and that will tell you what is the retracement. For example, if you go from here to there, it tells you the zone where probably the price could go back down, and it's often quite accurate. Not always, but it's decently accurate. But what's interesting is that you can use it in reverse. And basically, you can just basically go from the top to, let's say, the bottom that we've seen recently. And then it tells you basically what are the zone above the current price that it potentially could go. So here there's a zone around 83K. Sometime we see going to the 3.6, and that would be around 120. So that's interesting to see that it match what a lot of people assume could be possible. And saying that the question is whether or not you should take it from this peak to that bottom, or from a different kind of section of the price. Because technically speaking, if you're thinking in terms of cycle, like this is the peak of the cycle, but then we reach the bottom of the cycle here. So if we were to just do it from this point to the bottom of the cycle, so that might be more what we see. And then see, I was thinking that 250K Bitcoin would be possible, but this seems to be indicating that it could be around 224. I think it's quite in line with what my price target was from in the first place. So it's fun to see when things lined up decently well.
So you think that the peak of the cycle is 224?
It could go in that region. It's not impossible. So we can look at past example. So you see, it's the last peak was at 67K, or pretty much there, and you see that 3.618 is very close to that. Trusting those technical indicator is not necessarily the best thing, because if you think about it, there's different crowd of traders. And there's a lot of people who use technical analysis and follow the same investment pattern to trade. So it's kind of a self-fulfilling prophecy that it works. It's supposed to be based on psychology, but in my opinion, it's just because when you publish books and like a lot of people follow those patterns and they teach others, then you have like hundreds of thousands, sometimes millions of people who follow the same pattern. And a lot of that came in existence from the stock market. So the more people use those techniques, the more they start to work. So that's how I think about it. Meanwhile, there's a reason why very rich entity and people want to promote those techniques, because then traders become predictable. And I think once in a while you have a black swan event where it completely throw the technical analysis out of the water. But that's basically what I think. It's like if you go to the casino want to let you win, but overall they always make sure that they win. So it's the same principle here, like the very big, deep pocket of market makers, they will let traders and they will engineer those technical analysis pattern to be real, and they will let them win. And then once in a while, they will crush people really well. And this is how they make money. So that's why I would not recommend to trust technical analysis blindly. But I would say that quite often it works pretty well because a lot of people apply the same techniques. And then the more people apply them, then it's a self-fulfilling prophecy. But that means we can take advantage. We just have to worry and protect ourselves when the market makers decide to break the cycle, that we don't get caught into a bad trade once in a while where you lose most of your capital. And that's what you have to be afraid, is to make sure that you don't get liquidated. And this is typically done by the market makers. And this is why I always come back to those liquidation map like I showed before. So as you see, they just cut $20 million of liquidation right here, because that kind of yellow band disappeared after and significantly reduced. But they liquidated quite a lot of people along the way. So that's the game that they play. So right now, going back down to 60,437 is not impossible, and also 60,336 because there's some juicy zone there. Otherwise, above the current price, there's a lot more yellow above the current price. So that's why it maybe not impossible that we could go visit the upper range again.
Now, just to kind of pivot a little bit, I know that you also just launched a book. Tell us a little bit about that.
I've been working on a book in Tokenomics for the past year. I just launched it on Amazon. So there's a $100 price that I put, but there's a way to get it for free if you sign up for an alpha test and testing a technology that I'm building, like a staking pad. I call it Civitas. And I think we discussed that in a previous video. But I think if you help me test my technology, then I will give you a free copy of the book as a reward, beside the other reward of like what the staking pad is about. And I think this book has like 100 pages of content regarding tokenomics, and it's really tokenomics that is kind of a bit different from the rest of the market and what is standard practice in the industry, because I really focus a lot more on sustainable kind of financial models. I really don't like pump and dumps and like crypto assets that survive only one cycle and then they are dead. I'm not a big fan of that. So that's why I don't do the tokenomic the same way as most people on the market do it. And it's not just the tokenomic itself, it's the market making that has to be optimized for such a model. So that's what I basically explained in the book itself.
Great information as always. Thanks so much for sharing about your book, about the macro conditions, and about the current state of the altcoin market.